Good evening, everyone. That's Chrissy from Solstice ATR. Hope everybody's doing great. I will be doing two parts in this video. One is looking for a fresh signal in 2021, leaping from 2020 to 2021. Second thing is about traders that want to become a trader, for either a swing trader or a day trader. I will be covering that in the second half of the video. First of all, the important development that's happening in domestic and global markets. Economy rotation and we're going to look at different multi-time frames. We're going to look at the S&P 500, the Dow, the Nasdaq, the Russell, and probability of looking at the short, midterm, and long term by understanding there may be a shift in asset classes due to the change in the White House, as well as, politics that's going domestically in the US. We're going to look at some of the tech sectors, as well as, consumer products, as well as, some banking. And I want you to understand, or we will look at chart not being biased to one side. I want you to be open-minded for different changes in the market that can happen instantaneous on the short term. And in order to reach your goal, ask us how we can assist you. We're not a broker-dealer. Past performance doesn't indicate future results, and we tell you to use that at your own risk. In the second part that I'll be covering, I'll come back to it. This is the second section. What I want to do is for beginner tips for day trading. Let's first of all take a look at that Fortune 500 company. What's the Nasdaq, the Russell, and the Dow Jones Industrial Average? I have 3-month outlook here, compressed a little bit more. And every month, what I usually do from beginning of the month till end of the month, we anchor a fib from December 1st till December 31st, the highs and low of it. And we do the extensions where the fibs from the 0 to 100 are. Extensions, the minus 23, the 38, the 50, 61, and vice versa to the bottom and the top. The most important thing is understanding the levels, and usually you get the 50, the 38, and 61 act as either support or resistance. And we look at the last week range from Sunday through Friday, and we anchor the fibs because Monday was a holiday. We anchored the fibs for that following week. We were range bound for a couple of weeks, broke up, consolidated the following week before end of the year, and we pushed higher in January. And last week, because of the gap on Monday, because of the holiday, we get that little gap here. I marked it on the calendar, on the chart. And we had the Wednesday, Tuesday, Wednesday, Thursday, Friday. So we marked this area here. It's very important. Wednesday gap up. Then you had the Thursday, Friday inside the range. And this is another one. This is from the Tuesday range because the Monday was a holiday. This was the Friday action Sunday in the Eurozone, but it doesn't show you except the Friday afternoon close after 4:15 because it trades a little bit after hours for another 15 minutes. This is the reason why I anchor my fib from here to here. We are above the 38.2 fib. We tested the low, almost hit the 50 and bounced back out, but on Friday we sold off to the downside. The most important thing when we break down each instrument one by one, I want you to understand where the levels are in order to stay not biased to one side. Let's first of all take a look at this the RTY/RTY, that is the small cap, or you can use the IWM, which is fund for the Russell 2000. We can take a look at the Monday range and the Monday low to the Wednesday high. Thursday we sold off in the Russell. I do have some channels here. Then on Friday we fell down because due to the Russell has a 28% weight in 25% to 28% in the banking sector. Due to, if there's going to be inflation, interest rate bearing accounts, plus the Federal Reserve changing the way they implement on the long term, the way they buy bonds or they take bonds away from the market. So this will cause a reaction in the sector. Then we have a push higher on Friday where the Russell closed compared to the other instrument on the upside, but it sold off a little bit, but it broke out of those 3 days range to the upside. So that's the small cap RTY. The purple is the Fibonacci Fib Extensions from the monthly. So if you look at it, when I put my mouse on it, it shows you December 1st to December 28th, the highs and lows, and where those extension fibs are. This is the weekly fibs. We have them up for the coming week. So I want you to understand that the Russell was a little bit stronger than the other instruments. Let's take a look at now the Dow Jones Industrial Average, YM, or the DJX, or the DJI, dollar sign DJI would be the Dow Jones Industrial or the YM. If I zoom down a little bit here, we can see that the range on Dow from Monday, the holiday, coming up on Tuesday, range inside the bar. Then on Wednesday, we pushed higher. Thursday, we stayed in the upper distribution. Then on Friday, we have a gap here. If we take the overnight off, this is a gap in the profile. We couldn't, come back to see the prior close from Thursday. On Friday, it stayed weak. Then it double topped and sold off into the close to the 50% Fibonacci on the weekly charts. If we do lose the 61.8 Fib, we look lower. If we get a bounce off and continue higher or break out of this channel, we look for the upside to clear the 30 and eventually continue higher. That's the Dow. Let's take a look at right now the NASDAQ NQ, NDX, or slash NQ, or the QQQ for the ET. If we look at the NASDAQ 100, it has the Apples of the world, the Amazons, the Netflixes, the Teslas, the BIDU in there. So, some of these instruments, they do work a little stronger than others, as you can see. From the Monday range throughout the Friday range, the Nasdaq was a little bit stronger. It came out a little bit stronger compared to the Russell because of that reset, and it continued higher. But on Thursday was, it reset on Wednesday, then on Thursday reset down to continue and break the annual prior. This is an annual high for the year. It came back, reset in the overnight, came back, but it stayed in the range of the Thursday high, but it sold off on Friday. That's what we're going to make sure that we don't end up on the wrong side of a trade when we're looking at it on an annual basis on a long time frame compared to the short time frame. That's the NASDAQ. Let's take a look at the slash ES, which is the S&P 500 500, or you can look at the SPX, which is the big contract, or you can look at the SPY, which is the ETF fund for the Fortune 500 company. As you can see from the Sunday range through Monday, we had a low of 37.40.50. Monday was an inside day of the Friday, but we pushed higher to Thursday. We pushed a little bit more than on Friday. Wednesday we pushed higher. Thursday we had an inside day. Then on Friday we fell down in the overnight to come back inside the range of those 3 days. We retested the Thursday's close, but unfortunately couldn't hold up in there. We sold off to come back and close about 10 to 15 handles lower. So the most important thing is to understand the profile in the S&P 500 in relationship to the 18 simple moving average 50 and the 116 and the 200 SMA when you are in an up channel, down channel, or retracing to the downside. This is why I put the S&P on a fast time frame, and the other ones, what I'm going to do is zoom down a little bit to show you that the range from the prior week was an inside week. Then on that from the long weekend, we fell down because there was Martin Luther King holiday on Monday, so we had a down move on Friday. Then on Monday, we picked ourselves and cleared the annual high here, and these are the monthly Fib extensions for the December, and this was the annual high for the year. As you can see, our annual high for the year, if I go back from where is this? Okay, if I go, just showing you the February, I'm trying to get the annual one as well. Okay, it only giving me the December one. Okay, this is what we do. We zoom down a little bit so we can get to the annual high and low. Does that show it to me? I don't think it will, but if I zoom down, okay. If I put my mouse on the 23% Fib, you can see that we took the December 31st, 2020, the high till the March low of last year, because you know the February was the prior year when we fell down on the between the 22nd 18 area all the way down to March the 23rd, and we continued higher. And if I put my mouse back on it, you'll see where we started the Fibonacci. It was March 23rd, 2020 till the annual high of December 31st, 2020, and this is our high for the year, and which was around 37.54. So remember, we're going to trade what we see. We don't want to be biased to one side because things may change on a short time frame. If I zoom in for the December range, since we broke out, we retested that area last week. We fell underneath that 53 area. That's a very important area for me and the monthly Fib to keep an eye on. If the trend does change to the downside, we have this smaller linear regression channel in here. I put the blue one here and that green one. We are in a top trend, and I put in the white one last week into the charts because it's a little bit more sharper than the wider one down here in the green one, and we do have a wider one on the annual from down here. So I always have a smaller channel inside of a bigger channel. We are in an open count. It does not mean that we can fall, but it is a possibility of retracing if we do lose the gap from the Monday through Friday. I will show you why I'm looking at it. These were the prior highs from the week before, the 24 area. We retested them. We did hold the 23, 24, and we bounced up because this was the candle that made us push on Wednesday higher. When we fell down, we retested this high, but I mean the close of Thursday, but we were not able to hold it, and we fell back in. The most important area is to make sure that we do not lose the 24 or the 17, because there's a gap here in the profile. I can basically mark it with an oval. We're going to go get an oval. And this oval allows me to know where the trading hours are from here to here. As you can see, there's that little gap between this area and this area that we have to keep an eye on. If we end up losing that 11 area and continue lower, that means the possibility of retracing back to the 37.68, 37.53. It is possible, but does not have to happen. And if we do lose the annual high, you have to be careful of it because the retracement would be a little bit more deeper. But the weekly Fib, this is very important. The highs and low from Monday through Friday, and we keep an eye on the 38.11 area, which is the monthly Fibonacci, the 38.2. And 39.96 to 98. This is the gap in here, because if I put my mouse here, the high of this candle is 97, and the overnight high, which most people don't look at, that was 96.25. This is why I have marked this area, and the low of this candle was 37.10.75. Most people will look at the 11. So keep an eye and be open-minded of this area, and you can look at it on a monkey bar. I'll go do the monkey bars for you, or the volume profile. Monkey bars are usually on automatically. You just have to adjust the dates on them. As you can see, this is a 5 days 15-minute, and I will zoom down so you can guys see it. Okay, this is the, when we push up, this is the profile value area high, value area low. That's the POC. You can look at the prior week. I did a little video on it, and that's where the most time spent. This is, I'll basically open that square, and the triangle here, that little tiny triangle in here, that's to close the profile. Then, on Wednesday we opened here, we closed up here. The POC shifted, but the time did not shift. The second day, on Thursday, we had an inside day. Then on Friday, we looked inside the 2 days to close back inside the Wednesday's profile. But most important thing is keeping an eye from the 38, 15, 24 area all the way to the 37.96. That's going to be a very important area, because this is where we broke out of. make sure you be open-minded not to lose it. And if we do break above this area here, it's great. Don't be biased, okay? Now let's go back to the regular charts, and we'll go over a couple of different equities, and I'll look at BTC and gold. Let's go look at now BTC. Okay, slash BTC. This is very important, and I had called the 42,000. If you guys follow me on my video, and I said once we broke out of that 26,000 area and we continued higher, when we hit the monthly Fib extension and the annual Fib extension, this was the annual high. We pushed it to 23 to 38.50, and we got nice rejection at that. And I said, hey, be careful if we do end up losing the 40,000. It is possibility on the weekly chart to come back to the 29,000. Everybody saw I was a madman that week. If we take the fibs from last month fibs, let's just zoom in correctly. We take the last month breakup all the way to the top. We can see that on the push higher from the zero line, 78, 61, 50, 38, 23, and the 100 annual high. We pushed higher, we continued, we cleared the 61, 50, 38, and the 23 monthly Fib extension. You can have here a 78, you can have here 100%. We could not take the monthly high or the annual extension, the 50%. Eventually, we fell back down. And if you taken last week's range, that 28,900 was actually the minus 23.6 Fib. And we bounced off it nicely in the side of a linear regression channel. In order for Bitcoin to continue back higher, it has to clear these two ranges, the 35.8 and the 35,625, in order to continue higher. If it cannot, it can be an inside range coming back all the way to fill these two gaps. These two gaps, I have them here in a rectangle. I marked them with a bigger, longer time frame, but unfortunately when we broke up, I did not extend it further out. And if you do want to extend it, all you have to do is right click here, edit the property, and all you have to do is change the date to the right side to go for the extension. Instead of the January 16, you just push it like this, or you can edit it manually. Or put it till the 30th, and that will extend the chart to the right, that box that we created in the in the candles on the right side to see where the gaps are. So that's BTC. Let's take a look at GC. And gold has been, it was in an uptrend nicely. When we fell back down here due to the change in the trend, because money was floating from BTC to gold, gold to BTC, and the dollar. And if you take a look at the Visa or MasterCard, because people do end up buying, BTC, Bitcoin, or GBTC on credit card, the ETF for the Bitcoin is GBTC, George, B for boy, T for Tom, C for cat. That's why gold, American dollar, Visa, MasterCard, and BTC have different relationship in manipulating the price of the gold as well as the dollar in relationship to the Bitcoin, because they're trying to say, hey, that's a different way of looking at the commodities from gold going to BTC. It's an outside source. It's considered maybe like an artwork for someone, or maybe as an investment vehicle. That's why they instead of turning to gold, they went to BTC as a commodity for the long-term investment, because they look at it as well on tax consequences, whether it's tax in the US or international borders. There's a little bit discrepancy here. The Security Exchange Commission and FINRA are looking at these things. So you have to make sure that you do your homework on which brokerage firms and what you do here. As you can see, gold, when it fell back down, here it fell sharply. It had a nice weak range bound. It fell a little bit more, tried to pick itself up, but eventually it fell back in. We bounced off a 50% fib. As you can see, my machine grabbed the lows and highs for the week, and I did the same thing here on the Fibonacci. In order for gold to continue, and I should have re-anchored this channel, but I kept it there as a reference in case we do break up or not. My concern, I would like to see gold at the 1778 area, 1762, for a better positioning in a buy in gold. I don't like the pattern the way it is unless it clears, the 1890 area to become bullish, or it has to fall below the 1816 in order to be bearish to come back to the other side of the fence. So I don't want to be biased to either side because it created an H pattern, then reversed back up, and it's making a hop. Is it going to create a shoulder or break out and continue high? You have to be open. It's range bound. I don't like the pattern on it, and this is why I have not traded it as much as others than my friends that trade with us in the group. So I don't want to mention names, but some of them day trade it, some of them try to swing it, but you have to have a good entry, understanding where the levels are in relationship to the prior weeks and the long term. As you can see, this was range bound. It developed quite a bit of a profile here in volume in this mid area between the 1845 area, 1850. So if it's going to hold, it has to continue higher. If it falls below there, then it goes lower. So you have to be open mind to change. And let's take a look at CL. And I'll run a couple equities, and I think I'll finish a little shorter today than making it too long because I want to cover the last thing for traders in the group. Let's take a look at the crude. Crude had a nice, tried to break above that 53, 54 area. Hasn't been able to break up unless it gets up there, that $55 a barrel is a very important area. It had a, Wednesday, Thursday, Friday. Thursday was an inside, and overnight on Thursday through Friday they dropped it down. Then on Friday it tried to rally oil, but it couldn't hold up at the 52.50 area. It came back in to close around the $52. So you have to be very open mind if there's going to be change in crude oil or not. If there's going to be enough consumption, the lockdown, transportation, shipping, receiving, airline companies. These are the things you have to look at. Is there more consumption? Is there less consumption? Is there more inventory? Is there less inventory? Are they drilling enough or not? So this is what you have to keep an eye on. As well, one thing I've noticed, a lot of people are not looking at a copper, which is HG. From last year on, it's very, very bullish. Copper running higher. If there's going to be a slowdown in electronic consumption and other stuff, eventually copper will slow down because it's part of cars, it's part of computers, it's part of the home and stuff like that. If copper is going to be consumed more, this will keep the economy going because there's more on it. But if this starts to slow down, transportation starts to slow down, and oil tends to be on a halt, and there's too much inventory, this will tell you, hey, be careful, there's something in the global markets. You have to be open-minded to those things. Let's take a look at AAPL right now. AAPL. And what I'm going to do is basically zoom in here. We had the 127, 128 for a while. I created that rounded bottom, side range, then eventually broke up, retested it. And this from here, if I zoom in from the December area, we created a nice rounded bottom. It was range bound between the 132 and the 126 area. Eventually last week from the Monday holiday, it kind of broke out. Remember, this isn't maybe an earning report. It can have two standard deviations to the top, two standard deviations to the bottom. So if this is going to create a cup and handle and eventually stay above that 138 area, that's going to be a very important area. This is your annual high on Apple. Does it continue, or does it reject the cup and handle and go to the opposite side? So I want you to be very open-minded to change in trend, whether this is an earning play or not, because you get this very important channel at the 129, 128.80 for me is very important area in Apple to hold. Or does it continue higher, or does it fall from those 3-4 days push up? Is it basically buy the rumor, sell the news? Keep an open mind because the earnings around the corner. That's Apple. Let's take a look at Amazon. Oops. AMZN. Amazon did a nice wedge and eventually broke out. Similar thing. Let's take a look at BABA. BABA downtrending last couple of days after the push. As you can see, I've anchored the weekly, pushed up, came back in. Let's take a look at the BIDU. BIDU, from the prior month, it printed the ADX print 199, and it said, hey, it's going to have a cloud because the ADX got too extended on the monthly when it pushed up here, consolidated, pushed up, consolidated, reset halfway, and eventually broke up. Where did we go to? To the print of the ADX that was given to us a month ago in December around the 12th. So that's BIDU. Let's take a look at Facebook. Facebook rallied quite a bit after the wedge. Let's take a look at GOOGL. GOOGL broke out. Let's take a look at the NFLX after the report on, I believe it was Monday after hours. It pushed quite a bit because the earning came out very positive, and it had a nice push up. This was the annual high on Netflix. This was almost a double top, and eventually we consolidated for a while, created that V shape and pushed higher. Do we hold that 3 top to continue, or do we fall back halfway inside the range? Let's take a look at Tesla. And Tesla, as you can see, this was last month range, and eventually it pushed up. It does have a higher target, but I mean, if I show you these numbers from the ADX from 3 weeks ago, when that Wednesday, Thursday, it pushed higher. This is our annual high, and that's your, annual Fib extension for the 61.8, but doesn't mean it cannot get there. Sometimes it does, sometimes it doesn't. It takes a longer time to consolidate, because if there's consolidation coming back in, you have to keep an eye on the copper, the battery companies, and the competition such as General Motor. As General Motor, it pushed quite a bit, and I will show you how to anchor the fibs for the week. So if we take a look at Monday's was the short week, and we pushed high, we take the anchoring of the fib from the bottom to high. We grab the Fibonacci. This is the Monday's low to Thursday's high, which is the whole week. We know the 38 is here, that's our 50, and that's our 61. Very important that that General Motor holds the 52 and the 51.80 in order to continue higher, or comes back, retests the 48. That's General Motor. And I will show you how to do the monthly as well on it from December 1st through December 31st. So we'll anchor this area here as well. So we know this is December 1st, as you can see. That's the high. That's the 24. Let's go this way. 29. That's the first. And we go to the bottom. Where's the bottom? It's the 39 area. Let's just take a look at it. As we can see, when I anchor it, that's my 161. If I want to get the top, what I do, I grab the bottom from here to the top. Okay, there we go. Okay, we redo it. There we go. I'm doing it the other way around to show you where the height is for the extension of those fibs. And if I zoom down, this is the monthly. And what I usually do, I right click on this area, edit the property. And instead of having these colors, I select them. I go more, and I go to the purple area. And that's how I change the setting to understand where the monthly in relationship to the highs and lows of the fibs when we get the 61 and the 261 extensions, or you can duplicate these fibs to the upside or duplicate them to the downside when you re-anchor them. If this area is lost on my monthly Fibonacci and I cannot hold the 23.6 fib, I would look for the 38.2, then the 50. So that's very important. Similar thing to NEO. A lot of people are looking at NEO. I mean, I can go through Volkswagen, we can go through, BMW. I'm just kind of giving you ideas how to look at stuff, how to do retracements, how to do channels, what's important and what's not important in relationship to breakdowns, understanding the patterns. That's very important. But last but not least, let's go back to the ES. And I'm going to go here, just zoom in a little bit. And this is very important. I'm going to cover it again. The prior 3 weeks in December, before we started January, we were range bound. This was the annual high. Then eventually we looked down on the 4th, and we continued higher. Then we consolidated for a week, fell down due to the holiday, then we rallied back up. A very important area is this range here. If I look at the profile in the charts or the consolidation before you come out of a breakout or a breakdown, we were consolidating here, compressed, range bound between the 38.20, let's call it, and the 37, 78, 80 area. If this area is retested and it breaks through it, we have to look lower. If we can hold this area and continue higher, that would be great. Don't be biased to one side. We do have this little gap here between this candle on Wednesday and the Tuesday range. So very important that 10, 15 area, 10, 11 area, all the way to 96, 97 area. Do we fill this gap, or do we hold the 38.2 to 23.24 in order to continue higher? But on Friday, we sold off. If I go to a 15-minute bar, and I will show you the sell-off, they consolidating. We looked down to the 22.24 was holding. I gave a tweet on Twitter, and I said 38.24 key area to keep an eye on to see if we hold. What was our daily fib? The highs and lows in the overnight. The machine grabbed them. We couldn't. We filled almost the gap. We missed the 46.5, 46 quarter. I believe that was the Thursday's close. We looked up into it, couldn't hold. In the last 15-minute bar, we basically sold off to close 10 to 15 handles lower, and this was the after hours. After the 4:15 close, the market opens a little bit and it closed right down here on the 50 fib. In order to continue, we have to bounce back up. If it falls, keep an eye on the 24 and the 11, 12 area. We may end up filling the gap to the downside. So before I finish, let's go back to the chart. I promised you I'll go over. This is very important. Take a snapshot of it. Go through it slowly. For a beginner, if you're going to be a trader, whether you swing trade or day trade, whether you use a computer or a laptop, important, not trading on a phone unless you're at work and you want to get in and get out of a position. This is your backup. You need a home computer or a laptop. I use laptops. So you need a fast internet connection unless you have a 5G network on your phone whenever you need it for backup. Use a good broker that has good execution. Do your homework. I don't recommend any. I know a lot of, I use my charts through Thinkorswim. I trade through different platforms. But the most important thing, if you're going to trade futures, stocks, option, forex, crypto, or electronically traded funds, you have to be able to understand that equities are traded for free. Options, they're going to charge you something small. Futures are going to be charged. Commodities are going to charge transaction fees. So the broker dealer is going to make money, but you have to have a good clearing house that has good execution. Decide how much time you're going to spend and commit yourself. Are you going to be a day trader, a swing trader, or part-time? Basically, go get somebody that's been trading for a while, understands the market. He's been doing it consistently for years, not 1 year, 2 years, and he says, I'm a trader, that has experience behind their belt, 10, 15, 20 years plus. I've been behind the screen myself, 14 going 15 years. Does that put me as an experienced trader? Possibility. Do I have success and losers and winners? Yeah, you do. But you have to understand the risk involved and learn from a person that will hold your hand to understand that what he can motivate you, give you direction in the way you can. Define your risk and reward ratio. Somebody has a risk of only losing $100. Somebody may have a risk of losing $500 or $1,000 or $2,000. Each person's situation is different according to their account. Decide how much capital are you willing to put into the account to grow it, or you're willing to lose it before. Because a lot of people, they come in and they throw money at the market and they end up losing it and they quit because they think it's a gambling, because they don't know what to read. They don't read candle books. They don't read Fibonacci's. They don't read channels, patterns. You have to put enough time behind the screen and learn patterns like you would go to school in order to be successful. Assess your market knowledge and learn a lot. Learn from others. Ask. Start trading daily and commit time to understanding in a nice quiet area so you don't get distraction. Market rotation and cycles. Market does rotate from sector to sector, season to season differently. And if you need our help, ask us how to reach your goal. There's our website. This is my Discord. Remember, everything that we do is for illustration use only. We're not a broker dealer. Past performance doesn't indicate future results. Why do I say that? Because I want you to be aware. Somebody can tell you buy something, then you end up losing, then you go, you didn't do your homework. Don't trade what others trade. Watch what they do, learn from it, and assess the products and the knowledge in order to trade the instruments you like to trade to make a profit. And I say use it at your own risk. Yeah, you have to use and learn from it. And that's the most important thing. I hope this was helpful. I look forward to seeing you. Take care. Over and